Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. We just interviewed John Bianchi, founder of STR Search. Anthony, what was a takeaway or two that you had?
I tell you, for one, there's been a lot of talk about short-term rentals or Airbnb is being dead or not a good business opportunity. But he had explained really what had happened with the uptick after COVID and kind of what's happening now. And again, if you find the right property, and I tell you, one impressive thing from him is he said he has a 100% track record in finding properties that are profitable. I mean, that alone should provide some experience and some validity to listen to what he says. And what he's talking about is finding the right property. And he looked at really evaluating two aspects. One is affordability or that price point, but also in a good area where there are a lot of short-term rentals. He specifically talked about the 20% rule, which I'm not going to take his thunder right now, but that was a very interesting rule on evaluating properties. And of course, Cam, he talked about some of the tax advantages of a short-term rental that is very different than a long-term rental. Cam, what were some takeaways that you had?
He did talk about the tax benefits, and I saw you get all giddy over there. It was embarrassing.
And I saw you started the podcast with introducing me as a recovering CPA.
One of the points that John made that I thought was interesting was that he's there to really help people in what can be what is the most difficult part of the Airbnb process, which is identifying the property. Because the point that he was making is that oftentimes you don't realize that you've got a bad property until 2 years later. And that is contrary to what most people think. Most people think, hey, the toughest part of this is going to be the hosting piece. And his point was, hey, you figure out the hosting pretty quickly because you get immediate feedback from renters, somebody that's coming in and using it. And so I thought that was a great point. The other one that I really enjoyed is he opened up, and I think this is why he's got such a tremendous track record, Anthony, is because he opened up with sharing some of the poor track record he had in real estate prior to STR Search. And it was because he was in sales and he was in operating, and he realized that he does not have the skill set or the patience for either of those two, but he really enjoys data and data crunching. And so he kind of pivoted and found tremendous success kind of in this niche. And so guys, if you guys are out there and you got some cash, you're curious about short-term rentals, this is going to be a great episode for you. Again, we hope you guys enjoy this episode with John Bianchi. He's the founder of STR Search. He's helped successfully direct over $70 million in investments into cash flowing Airbnbs across the country. He's a master of deciphering complex data sets, and he has a 100% success rate across 150 plus properties for helping clients acquire cash flowing Airbnbs. Guys, hope you enjoy this episode.
Take care.
If you're an investor or want to be an investor and you're looking to create passive income that exceeds your monthly expenses, then this is the podcast for you. Here on the Infinite Wealth Podcast, we combine the philosophies of Robert Kiyosaki's Rich Dad Poor Dad, along with Nelson Nash's infinite banking concept. Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. Today we've got John Bianchi, the Airbnb data guy. John, welcome.
Thanks for having me, guys.
John, Anthony is a self-proclaimed recovering CPA. How do you get this title, the Airbnb data guy? Where did that title come about?
Self-proclaimed as well. you got
to just claim it yourself.
It's claim it. You got to make a handle online, right? And so I saw somebody else named the Airbnb guy, and I was like, that's pretty good, but I like the data part, so I'm going to go the Airbnb data guy. And then I just tried to do everything I could to prove myself as the Airbnb data guy from there on out.
Love it.
Yeah.
John, we've actually have a relationship with you. We've talked before, right? You've introduced us to some tools in this subsection of investing previously, but not a lot of our listeners. I don't think we've shared that with our listeners. If you wouldn't mind, maybe give us some of your credentials. How did you get into this space? And we'd love to hear.
Yeah, I'll give the quick resume. Started Airbnb back in 2017. Built up a portfolio of arbitrage and management and cleaning company out of Chicago. Had a couple down in Scottsdale, a couple over in Michigan. That got up to about 15, and then COVID came around and wiped that out. I realized that I wasn't very good at sales and I wasn't very good at operations, and you need both those things to run a property management company. But one thing I did know how to do well was analyze the data for these Airbnbs to pick out the right properties. And I just fell in love with it. And so I wanted to get a lot better at that and kind of prove that the system that I created would work. And so I applied myself to a couple different companies. I ended up working with this company and getting hired from a company called TechVestor. They were at the time, they had about 5 properties. And they are now the largest short-term rental investment fund in America. They have over 150 properties. And I acted as their head of data for 2 years and helped them pick out the markets, the properties, and how to set up those properties to drive the most amount of revenue. That was my job all day, every day. And I just got to prove myself over and over and over again to like try and understand the system, the process, and all the tiny little things that make a difference. And every single last one of those properties is profitable. So we have a 100% success rate across all the properties. From there, I ended up being able to find more properties than they were able to purchase. And so I then broke my exclusivity contract with them. I still like my company still works with them, but we broke the exclusivity contract and I opened up a company called STR Search, where instead of just working with an institution, I can work with everybody and anybody. And so then therefore people can hire me and I can help point them in the direction of a property that would be a profitable short-term rental based off of their budget and preferences. And we've been open for about 15 months and we are already over 100 clients, like well over 100 clients, and have successfully landed our client. Like I think there were like 75 plus people who have founded properties, and every single last one is live is also a profitable property. So we still have a 100% success rate at finding profitable properties, whether we're working with institutions or retail. And at the same time, so while I was in that process of working with TechVestor, after I had found about 120 properties, I sat down and created a course, 100% free, teaching every single last step that I did to identify the markets, the properties, how to set them up, how to underwrite them, everything end to end, and gave that away for free. And so that's my track record. That's a little bit, a little bit of credentials, a little bit of proof behind what we've done. So that's how I've got I made up the name Airbnb Data Guy, but I feel like I've earned it over the past 3 years. So, bam.
John, that is impressive with that track record. I'm trying to compare that track record to Cameron's good hair days. I think you guys were tied. I mean, it's hard to do that on the regular basis. But John, why would there's so many opportunities out there? A lot of people look at long-term rentals and even mid-term rentals. What are some of the advantages of short-term rentals?
The main goal, I think the only reason why people go for short-term rentals is because there's the opportunity. It's not guaranteed, but there's the opportunity that you can make better cash flow than a long-term rental, right? And I've actually, within the past 2 weeks, I've been trying to decide how I'm going to invest my own money into a property because, for a very long time, I didn't have enough capital to be able to buy my own property. And so finally got to the point where I can. And I had to try and decide how I was going to allocate it, right? And you would think I'd automatically just go to Airbnbs, but I've got a cousin who buys apartment buildings and he's extremely wealthy because he's really, really good with buying these apartment buildings. And so I'm thinking like, well, does it make sense to go over there and build up this equity and increase the net operating income of these properties and gain more equity and growth and all this kind of stuff. So anyways, I'm debating all these different ways in my head of like, how should I invest it? And the one thing I realized, which kind of ties back to answering your question, is that I honestly don't care how big the number is in my bank account. I really don't. But what I do care about is my mortgage being paid for, my utility bills being paid for, the food for my kids being paid for, like kid, I don't know why I say kids, kid being paid for. So like to me, cash flow is so much more calming to my mind in comparison to a big number in my bank account. So then therefore I think the main reason why people do short-term rentals, I don't think I'm alone in this, is because there's the option of creating this cash flow that isn't from, trading your hours for dollars, that allows you to be able to have this investment, and then it's still got all the same real estate benefits like tax savings and appreciation and principal pay down and all that kind of stuff. So that's my 2 cents. What are your guys' thoughts on that? Do you agree?
Are you ready to take control of your wealth and make your money work for you, not the banks? The infinite banking concept can help you build generational wealth, protect your assets, and create financial freedom.
If you're curious if this concept works for you, let's talk. Let's get on a free discovery call where we can talk how you can use infinite banking to supercharge your investments.
Don't wait. Your financial future starts now.
Well, John, I wasn't sure where you were going, but we always tell people invest in things you know.
Hmm.
And short-term rentals, so that would be a natural selection. But John, I also liked how you evaluated on really what your goals are and what is important to you, and that is cash flow as opposed to maybe growing wealth or appreciation. So again, you need to invest in what you know and invest in things that coincide with your values and your goals. So for you, that sounds like a perfect mix.
Yeah. And sorry, Cam, real quick. I had 2 options. One that would have had better equity appreciation, one that would have had better cash flow. And that's how I ultimately was like, okay, it is the cash flow I care about more right now in comparison to the equity. So anyways, yeah.
Well, the 2 things I was going to say was, one is that, man, you got a tremendous track record, right? You just shared that credentials at the beginning. And man, I was so moved that I would invest with you, right? So I would think that you would be comfortable enough too. But then also, man, as I don't know exactly what age you are, but generically speaking, I think people in their 20s to even their mid 30s should be investing in themselves first and foremost. And so, man, if you're able to do that for a period of 10 years to 15 years and you do that consistently, man, you're going to be set. You're going to have all the opportunities to move into syndications with brother-in-law or anybody else later in life. But you're the one that's going to make your financial future go forward. So don't miss the opportunity to invest in yourself.
I appreciate that. There's one thing I actually learned along the way. I see myself as an entrepreneur more than anything else. And the idea of going out and getting a job, right, to build upon a skill, hurt my soul. It went against everything, right? It kind of killed my pride and all that stuff. But at the same time, it was this opportunity to get really good at something that I really enjoyed on somebody else's dime and be able to prove to myself I knew what I was doing. It was advice I got from somebody else. I took it and it turned out to be amazing. And now, I'm back to owning a business just like I knew I always would. So
Love it.
yeah.
John, so I'll jump in. Let me get this straight. So if somebody's out there, right, we've got a lot of clients that are out there looking at passive income opportunities. Hey, I've got some cash. What do I do with it? The point at which somebody approaches you is, hey, I want to do Airbnbs, but I don't know which market to go to. Is that right? That's the point.
Well, they may know the market. Most of the time they don't. That's one of the hardest things with the short-term rental industry is like, what market do I go into? But really, these people have decided they want to buy a short-term rental. They've tried finding one themselves between finding the market, finding the property, all that kind of stuff, and they have just not been able to make it work. Either they don't have the time to be able to sit down and actually figure it out. That's the number one reason people hire us. Or they run into analysis paralysis and they just go, I can't, I need help. I need somebody. They can fit because once you get a good property, hosting it is significantly easier, right? And in comparison to the two, and so they hire us, they get the property, and then they're kind of off to the races on their own.
Well, so I was going to touch on you mentioned analysis paralysis, right? So, man, you can find that, especially in this space. So if somebody comes in and they are maybe paralyzed, is what data points are you kind of covering with them? How do you help somebody overcome analysis paralysis with data?
Well, there's sort of 2 ways of thinking about that, because there's one way where what do we do with our clients? And then the other one is how can anybody come over analysis paralysis? With our clients, we have already done all of the research. We have the track record, we have the proof, and we just show them that. And they trust us. That's why they hired us in the first place. So for them, it's not really getting over analysis process. It's more of like, okay, I've entrusted you to help me make this decision. And we show them the data to make them feel confident to be able to put the offer in. Right. That one's pretty straightforward. But like for everyone else out there, I think I have the most opposite way of getting past analysis paralysis, which is to just keep analyzing because you like just keep going. Like you're stuck in this analysis paralysis because maybe you don't have enough information, you don't get it that much, right? Whenever you're learning a new skill, you're going to suck at it no matter what. And I feel like that's when analysis paralysis sets in for people, and it's not really analysis paralysis. They're just learning a new skill and they don't get it. And so the more reps you get in, not only will you be more comfortable with it, you'll also get more accurate. You'll be able to see trends. You'll be able to like start to see things differently by doing it over and over and over and over again. So when you do find yourself stuck in analysis paralysis, keep going and keep trying to find a trend, a consistency. And when something is better than the consistent number, that's when you know you're looking at something good. So as an example, if you're analyzing a market and you're realizing all these properties are coming out as 5% cash on cash, all of a sudden you see one that's 20% cash on cash, you're like, that's the good deal right there, right? And you've done enough reps to feel confident that you're not wrong with your numbers. Thanks.
Oh, that's very interesting, John. When we're evaluating a property, what do you look for that makes a short-term rental property cash flow versus one that cash sucks?
Yeah,
Or
good
sucks cash, whatever.
Yeah, you need a property that is not too expensive and in an area where there is a good amount of rental demand, right? You could buy a very cheap property in the suburbs of Detroit, but the ability to get that, to get people there, to get it rented out, you know what I mean? There's no travel demand in the suburbs of Detroit. So what you want to try and find is starting off with demand. That's kind of like an easier thing to do, right? It's like, where are people going to travel? Now, mind you, people travel all over the place. So there's a ridiculous amount of places that you can go to figure that out. So that's pretty difficult. But the next step is like, well, how much do these properties generally cost? And if you go to like Park City, Utah, that's a really easy one to just avoid because the properties are so expensive. And once you have a $1 million property or $2 million properties, just the debt coverage on that alone is really hard to get over when you only have 365 days to sell. And so, like there's no quick and easy answer to your question other than trying to go into a market where the property is not ridiculously priced. There's still a good amount of travel demand, and you can figure out the travel demand, meaning like how is there a good travel demand, by going to look on sites like AirDNA and seeing that there are a decent amount of money being made from the properties that are being rented out, right? And what we use to know if a market has potential or not is something I refer to as the 20% rule. And this is not 20% cash on cash, not that. It is 20% price to rent ratio or gross yield. So all that means is if I buy a $500,000 home, can it make $100,000 in revenue? If it can, you'll be very happy with that purchase. Like I'll be very happy with that. That's sort of what we look for. Can it work if it's less? Yes. But in general, if you can look into a market and you can see that a property for sale has the potential to meet that 20% rule, it's a good market that has good cash flow. And then you just got to dissect it deeper.
Very, very, very interesting rule. I like it.
John, can you comment? Like, so I've spoken with some people, some clients around the country that have Airbnbs, and the consensus from what I've heard is there's kind of a drawback kind of in the Airbnb market, right? Is that what you're seeing as well? Are there still plenty of opportunities out there, or is it just kind of market specific?
Can you define drawback?
Yeah, they're losing money, right? So,
okay. Yeah,
right?
yeah.
They're looking to sell their properties, right? They're not happy. The bookings have dried up, and they're looking, man, I got to make a pivot here, is what I'm hearing. Is that just kind of in one specific area, or are you seeing that overall nationwide?
I would be very surprised if those people had properties that were actually really good at one point. In other words, they were probably bad purchases right from the get-go. And it had nothing to do with the Airbnb industry as a whole, and more so just a bad purchase. Because that's what I see all the time, like all the time. My entire business was built around this idea of ensuring that nobody buys an unprofitable Airbnb, because so many people just go out and buy a home without doing any of the research. And this is far more complicated than a long-term rental. You can't just look at your neighbors and see that they're renting it out for $2,000. If I had a hot tub with string lights and better photos, I could make significantly more money than you can, just because I understand how to do this. And if I can price my property very strategically, I can make way more money than you as well. And if you don't know these things, and then you go look at my property and you go, oh, I can make the same amount, the reality is you don't really know what you're doing. And then you're going into an extraordinarily competitive industry, and you're just getting eaten alive. And that happens like you wouldn't believe. And so I don't think let me say this, from our homes that I've helped people purchase, there isn't a drawback. They're not like they weren't profitable. Now they're losing money. They're still making money. They're still performing well. Everything's happening just fine. But there's a lot of other people out there who bought bad properties, and it takes 2 years to realize you bought a bad property. Because in year one, you are still figuring things out. And by the end of the year one, when it's not making money, you go, I'm going to reinvest in the property. I'm going to make it better. And then you do that. And even with making it better, you still don't make any money. And it's because you either overpaid for the property in a market with not enough demand to be able to offset your expenses, and then therefore would never cash flow in the first place. And after that second year, you go, well, we've lost money for 2 years. This isn't, Airbnb is not working. Airbnb sucks. All the gurus lie. Therefore, I should sell my home. And the reality is that you just didn't do enough research at the beginning to know if the property was going to work or not. So that's what I believe this drawback is in the Airbnb world, is literally just people who bought bad properties. There's one scenario where there is a real life drawback, which is people who invested in markets that boomed during COVID. So people were not traveling internationally, and people were not traveling to cities, which left only one type of market, which was the rural sort of areas, the national parks, those sort of spots, right? It's like get a cabin away from everybody and go with your family so you don't get COVID. Those places absolutely crushed for 2020, 2021. Then people started buying in there in like 2022, when that fad was kind of going away because people were traveling internationally. They're going back to cities. Cities started to boom with their pricing. And now these places where it was crushing is no longer crushing. And that was a quick up and drop. But that was solely due to COVID.
I tell you, John, we have a client that it happened exactly what you said had happened. They had a home in a lake area, turned that into a short-term rental, killed it. So they bought 3 more, killing it for a little while, and then just like you said, the market changed and they were not cash flowing anymore. But fortunately, he bought it. I mean, with the appreciation, he ended up coming out really well, which again is another thing why we like real estate in so many ways. Because if we're buying it for a short-term rental, and maybe that cash flow doesn't turn out, hopefully we have some appreciation and some other ways to still build our wealth.
Yeah.
Now, John, what are some common mistakes you see people make when they jump into the short-term business?
So I'll explain it this way. It's just, I say this all the time. I'm biased when I say it, but I think it's accurate. Everyone's extremely concerned about being able to manage and host the guest. Okay. So when you haven't bought an Airbnb, all you're thinking about is like, how am I going to get this property cleaned? How am I going to make sure that I message them right? How do I give them the door code? Right. All of those things are what people are really stressing about. And they spend a lot of time, educating themselves on these things. And the way that I like to think about stuff is like, what's the worst case scenario? Right. And if I can deal with that worst case scenario, then it's okay. Right. And the worst case scenario of not knowing how to host is that, you host somebody, you don't give them the door code right away, and they're sitting there for like a half an hour waiting for you to message them. The place isn't clean the way that it should be cleaned. There's some areas that are missed. And then maybe you didn't message them very well, and they just kind of have like an overall bad experience at your place, right? Well, by the time the next guest shows up, you will have just learned everything not to do, and you would make damn sure you're not going to do it again. And so you will have like learned it already. And the worst thing is that you got a 1-star review, which does suck, but mind you can like delete a listing and restart tomorrow. You know what I mean? It's like really not that difficult of a thing to do. Whereas the other thing that's really difficult to fix is buying the wrong property in the wrong market for the wrong price, set up the wrong way, which is kind of what we've already talked about, right? Because it takes you so long to figure out that this isn't going to work out. And now you have to 1031 the property and all these different things. And so that is a much harder problem to solve if you screw it up. So then therefore, the number one mistake I see people making in the industry is not taking all the time that they possibly can to comprehend the data, comprehend the underwriting, comprehend like their competition, understanding the market before buying a property, and then figuring everything else out. Does that make sense?
Mm-hmm.
Yeah. That's the number one issue for sure.
Now, I know we got a lot of our clients that are debating between a long-term and short-term rental. What are the major differences between the two asset classes?
Short-term rental is way more work. It is not passive. Anyone who says passive, it is not. It can be operationalized, it can be automated a lot, but it is way more work in comparison to a long-term rental. You can hire somebody, but you lose a lot of the cash flow benefits because you're now that the person you're hiring is pretty much taking most of your money there. That's the number one thing, right? Is it's just more work to start. The second thing is that it costs more. So you buy a property for a long-term rental and you buy a property for a short-term rental. The long-term, you're kind of done, right? You just get some tenants in there, but the short-term, you got to furnish that entire thing. And with the competition nowadays, right, with the pickleball courts people are putting in and the jungle gym, the mini putt, you know, we're helping clients spend like $150,000 to $200,000 on design, amenities, and furniture, right? And like light reno. And so a lot more money up front to be able to get it going. Mind you, it's still a good investment, right? You're still able to make the cash flow as long as you get the right property in the right area. And the third major difference is the taxes. So, which I know we kind of touched on for a second before we got going, but the STR tax loophole is a tax strategy that allows you to be able to write off active income compared to passive income, right? So as long as you meet certain requirements, you can the money you're making from your W-2 job and the taxes you have to pay on that can be removed or written off, I guess you could say, through a short-term rental if you meet the requirements. Again, I'm not a tax expert whatsoever, so I'll do my best to explain it. But there's a lot of education out there. Even on my website, I have a free course with the guy who figured out the tax loophole, explaining it end to end. So if you do want to go deeper, you definitely can.
Now, John, you had mentioned before we hit record that there were some new announcements or rules that were going to affect short-term rentals. You mind sharing that with us?
Yeah. So 100% depreciation, bonus depreciation is very, very, very close to coming back into act. So what that means, I'm gonna do my best here. You can do a cost segregation on a property, right? To figure out what can be depreciated from that property to be able to use that depreciation to offset your taxes. Now, in the first year, as of today, you're able to do a 40% bonus. So in other words, like let's say you've got $100,000 worth of that can be depreciated. You can pull 40% of that forward and then use that to write off on your taxes, right? In year one. Now, it used to be 100%. And so if I had $100,000 to, depreciate, I could use that full 100% in year one against my taxes. And if I made $100,000, now I just wrote off $100,000 and I owe $0. That's my understanding of this, right? Now, I don't understand exactly how your government system works, but it's it's gone to a part where it's sort of past the stage of where that is like the hardest stage to pass. And now it's just for markups is what's called, which is like essentially like rewriting. And there's a slim chance that it'll get removed at that point. It's more of just like verbiage. So what this means is that if you were going to buy a short-term rental, and as long as you met the requirements of the STR tax loophole, instead of getting 40% bonus depreciation, you get 100%. And what that could look like is if you buy, as of today, if you were to buy a $500,000 home and the land value is about 20%, this is like a rough estimate, okay? Without getting into all the details, you could save about $22,000 in taxes, right? At 40%. If it goes back up to 100%, then it's $55,000 that you could save in that same scenario. So an extra $30,000 in tax savings if you decide to move forward with a short-term rental and meet the requirements. And that's retroactive back to January 1 of this year. And so anyone who bought a property this year, and it has been year after year getting lower. So it used to be 100%, then it went to 80, then it went to 60, and now we're in the year of where it's 40%. And the objective is to make it 100% for the next 4 years, which would just be crazy. I see it as a great thing. I also see it a lot of people are going to really screw up because they want the tax advantages. So they're gonna want to save on all these taxes. They're gonna want to be able to take advantage of this, and they're gonna go out and buy a really stupid property that will never cash flow, and they'll probably wipe out all of the savings that they would have made over the 2 years and have had worked that entire time to run the property. So I think it's going to cause a lot of people to buy dumb properties, but at the same time, for the people who buy the right property, it's going to be a great tool for them to reinvest their capital. And speaking as a Canadian, where we don't have anything like this, it is unbelievable that you guys have these options in America. Like, unbelievable. I'm extraordinarily jealous. So be happy you got them, you know? So,
Well,
anyway.
And that's great news. I know they were talking about the 100% bonus, but I didn't know that it had gotten this far. And kind of just like John's talking about, like short-term rentals, it's easier to deduct those losses against your W-2 income. But in a long-term rental, you need to be considered what's called a real estate professional, which we're not going to get into it now, but we've gotten into it plenty. But really, we need one person who can devote a certain amount of time into real estate. And particularly, it's easier if they don't have a hard to qualify if both spouses have a job. But if one doesn't, there's ways to qualify. So I can see that being one advantage of the short-term rental.
John, one of the things I heard you mention there is that I think a lot of people, I agree, are going to hear some of these tax advantages. They might run out there and start to look for Airbnb properties. And before they kind of make a mistake of just looking for a property with a really cool hot tub, right? Can they reach out to you? And what I'm hearing is you'll be able to help them kind of build a buy box, right, for their next Airbnb purchase. Is that right?
So they can reach out to me and my team for sure. We don't just build them a buy box. We actually, that's like we already have the buy boxes built. We try and make it stupid simple for our clients, right? They come through, they tell us what their budget is and what their preferences are. We guide them to properties that meet both those criteria. And we use data to be able to prove to them that the property is going to be a good investment, right? So in other words, we're not just saying like, here's a market, here's the data, go figure it out. It's here's the property within the market, everything you need to do to get it set up, how it should be set up, where it should be set up. Here's all the people that you need to be able to connect it with. And then once you have it up and running, we're going to make sure you're marketing it the best possible way so that you can actually hit the numbers that we're forecasting. Does that make sense?
Absolutely. That's exactly what I was looking for, is just to make sure that our audience understood kind of the services that you're providing. So again, with that said, is if somebody's out there listening, they've got some cash, they've got some curiosity, man, where can they find you?
STRsearch.com is the best place to go. And like, you can find me online and like Instagram and stuff like that, but I would rather you guys go to STRsearch.com. And the reason being is because I've created a course that teaches you exactly how to analyze data to find a profitable property without anything held back. And so the way that I've built out my business is, here is all of the information. You can do it yourself, but you have the option to hire us if you want to. And it's, again, 100% free with all these resources right on the website for you to go to. And I want to make sure that people realize that they can do that because, again, we're trying to make sure that nobody buys a stupid property. Yeah. And one little last thing I want to throw in here is, with the STR tax loophole, one of the requirements is that you have to get 100 hours in and more than anyone else. That's like one of them, which makes it a lot easier to be able to hit compared to the rep status. But analyzing and researching for a deal does not count towards those hours. So just something to keep in mind. Does not. Yeah. So if you're, if that helps you decide to move forward with us because you can't count those hours anyways, might as well just reach out and have a call with us. You know what I mean?
Well, also, John, what you're at state is that it takes you really 2 years to determine you have a bad property. So I could see the value of having your expertise and getting that good property from day one, as opposed to waiting till day 800 and like, oh my gosh, I'm in the wrong property. All that cash flow and time you could have lost could have been saved by some deductible expenses up front. Is that fair to say?
That's fair to say. Yep.
John, man, I love your approach. I love that's been our approach is education, right? Is to provide as much value and free resources for individuals out there. So the fact that you've got strsearch.com that's 100% free is just a testament to kind of what the value you guys are providing. So, John, hey, man, we really appreciate you coming on. Thanks so much.
Thanks for having me.
Go make it a fantastic day.
Take care.
If you like this video, I know you'll like this one. And if you want to learn how investors use infinite banking to increase their returns and lower their taxes, check this out. And if you have some questions and want to see if infinite banking is for you, hop on a discovery call with us. Link for that will be in the description.